Out
Please.
of 100 people, 4 will get the message.
Silver is something that's needed. It's essential. It's imperative. You cannot run a society without silver.
Solar panels, electric vehicles, jewelry, paint, medical supplies, antibacterial band-aids, smartphones, home phones, toy phones, batteries, coins, bars, rockets, satellites, photography, radiography, catheters, hospital furniture, nanotechnology, 5G technology, water purification, mirrors, windows, catalysts, laundry detergent, jet engines, helicopter engines, air conditioning systems, dental alloys, silver iodide, LEDs, DVDs, CDs, cameras, watches, and water pipes. These are just a few of the thousands of uses for silver, the proverbial multitasker of the metals world. Whether it's climate change, pandemics, or the devaluation of wealth, silver is part of the solution. Join me today as I discuss silver, its applications, and its role in our future. Coming up, we have David Morgan, the silver guru himself, talking to us about why the silver price is so low. And don't miss ChartWatch, always a popular feature. ChartWatch allows you to hear some insights and technical analysis from master trader Garrett Soloway. Here he gives us a roundup of what's been happening in the gold and silver markets, as well as anything else that sparked his interest. And because we've loved reading through your comments and tweets, we're embracing audience participation and asking you to send us tweets, news stories, or even anecdotes that say something about the times we live in. This week's Sign of the Times has been sent in by one of our Twitter followers, and I'm looking forward to sharing it with you later on. And finally, stay tuned for Fire, Hire, Admire. This is where we ask our special guest to name somebody in a position of power or influence that they would fire, someone that they'd hire, and someone that they admire. Welcome to the M3 Report, your show for metals, markets, and money. I'm your host, Dave Russell of GoldCore.com, the leading precious metals dealer. The M3 Report takes an irreverent look at financial markets and the doublespeak of policymakers to help you better understand what's really going on with your money. This is our third episode, and last week we talked to Dr. Mark Faber of the Doom, Gloom, and Boom Report about inflation and the dwindling power of central bankers to dig us out of the mess that they've created. If you missed the show, then join thousands of others and hit subscribe to make sure you don't miss it out for much longer. But first, a little Greek, or rather, a Greek proverb. Those who fight with silver spears are sure of their victory. Now, our understanding is that this proverb was originally about using bribery to fight your enemy, but we think we should repurpose it and think of our silver spears, or coins and bars, as a way of achieving victory against a number of challenges that we face today. You see, silver is more than money. It's the cornerstone to a number of applications that help us live our lives online and through the touch of a button. And what excites us right now? Well, it's its role in technology, medical sciences, and renewables. On a planet that has become increasingly reliant on technology, is pushing medical discoveries to new limits, and urgently needs to move to sustainable energy sources, silver is very much at the forefront of that frontier. But it's very underappreciated by the new generation of investors. In an age of cryptocurrencies, NFTs, and meme stocks, is it any wonder that the millennia-old asset silver is considered by some to be too old-fashioned to own in your portfolio? After all, it's pretty tedious. There's no mystery surrounding its origins. It's easy to understand, and there are certainly no bizarre company founders pumping up the share price. You rarely read about it in the headlines. So is it just not the modern way of investing anymore? There's a growing trend in risk-hungry investors. The desire for risk is growing as more people work from home, day trading, seeking out high and fast returns. This means that they go to stocks that have a low barrier to entry for both companies involved, for example, crypto-focused companies, and the investor, rather than something like physical silver or physical gold, which requires more costs and effort to become an investable asset in the first place. But to invest in silver today is the most modern thing that you can do for your portfolio. We'd go as far to argue that amongst all of the trendy FANG stocks, Tesla, NFTs, and cryptocurrencies, silver is about the most tech relevant. COVID-19 forced us to live our lives online more than ever before, and as a result, more people got risk hungry and began to think that tech stocks were the only investment worth thinking about, not considering what supports that technology. What so many people forgot, however, is that in order to live online, you still require physical infrastructure to facilitate it all. Whether you're living in Second Life, doing your Christmas shopping on Amazon, stocking your store through Alibaba, using Google Maps in your car, or embracing green energy with your Tesla, you still need infrastructure to make all of this work. This is where silver comes in. It's rare, but not as rare as gold. Around 15 times more silver is available in the Earth's crust than the yellow metal, but it has so many more uses across a number of industries. It's thanks to its physical properties that silver is so crucial for human development and the future of planet Earth. It's highly conductive, malleable, reflective, and ductile. It lends itself to a number of applications that we not only use every day, but ones that whole industries rely on. From solar panels to electric vehicles to antibacterial coverings on medical equipment, silver is vital to our day-to-day life, but also to the life of our planet. Last year, industrial demand was up nearly 10%, a record since 2010, a trend that is expected to continue as its end use in green technology is driven not only by more conscientious buyers and governments, but also a major fuel crisis sparked by shoot-yourself-in-the-foot energy policies and then exacerbated by the war in Ukraine. Even without the war in Ukraine, we as a global population are rapidly moving towards a more sustainable way of living and operating our businesses. Generally, it's mined as a byproduct of mining for other metals, namely copper and zinc. And so its supply is dependent on so much more than direct demand. But this could cause problems. In 2022, there were silver shortages around the world. Silver bullion dealers struggled to keep up with demand from investors, whilst the supply chain for crucial electronic components, such as microchips and semiconductors, was massively impacted by a drop in the availability of silver. And yet, despite all of this potential, all of this demand, the silver price remains unimpressive. Last year, investment demand for physical silver was up 36% and overall demand was up 19%. But what happened to the price since then? What needs to happen to get it off the ground? What will it take to get it above $20 an ounce? This is exactly what I asked this week's guest, Mr. David Morgan, because if anyone knows, then it's the silver guru himself. David Morgan, welcome to the M3 Report.
Well, thank you, Dave.
It's great to have you on the show, so thank you for that. I want to start by asking you what makes silver such a good investment in this environment. I mean, we've got inflation in the US just shy of 10%. We've got heightened geopolitical tension, particularly with the war on the continent of Europe. And we've got the world pretty much still awash with money. So what makes silver the perfect investment right now?
Well, that presupposes that silver is the perfect investment, but I would say it's probably right on up there. There's a lot of reasons. I think the number one reason is, particularly in commodities, not so much in equities, it's always good to buy low. And I have one of these many books back here. There's one called You Cannot Lose Trading Commodities. Now, if that isn't a title that'll wake you up, because 99% of the people that try to trade commodities lose. So why in the heck could you even write a book like that? And the premise of the book is, if you wait and you see an opportunity to buy any commodity, be it an ag, be it a soft, be it a metal, under the cost of production, and you are patient, you can't lose. So the thesis is that whatever the commodity is, if it cannot be produced at the cost you can buy it for, eventually it's going to have to rise in price. And then he does like a scaling in where you look at, what your bank account, bankroll is, and you act accordingly. So I really thought that made a lot of sense. And it does, because he used sugar in his example in the book and a couple others. And in all cases, eventually the commodity will come up. So that's number one, is that the true cost of silver, all-in sustaining cost, is pretty close to where we are right now in US terms, US dollar terms. You could argue there's a couple primary silver producers that are under the 19 and change level, but it's a cat's whisker. And with the cost of petrol and diesel going higher, I can, do the math in my head more or less on a broad base and say, look, it's going to be much higher because fuel costs are so much higher. So what they showed me is all-in sustaining cost, at the end of last year, it's gone up significantly. In some cases, fuel costs account for 25% of their expendables, not the capital outlay for the plants and equipment, but what they use as a consumable, which is fuel, primarily. And of course, labor costs in some jurisdictions are going higher as well. So David's simple answer, you're buying low. What else? It's used in a war effort. It's in a continual deficit, more or less. The above ground stocks have built up over the last several years, actually. So there's more silver sitting above ground, but most of that silver that's above ground is already bought and paid for and owned once, twice, or multiple times. So there's very little what I call float that's really available to the market. The reason, we'll get into the reason why we still have the price we have. So I'd say it's buying low. And the last one is, there isn't a lot of silver left. Now, I think we've hit peak gold. I really think so. But I don't think we've hit peak silver. But we're close. And silver is something that's needed. It's essential. It's imperative. You cannot run a society without silver. You could actually run a society without gold. And so if you get in a real squeeze and had to make a decision, well, I've got X amount of, funds, so much energy left to build out another mine, and you have a choice of a gold mine or a silver mine, it would become a silver mine. Because if you got to the last amount of money to produce one more mine, silver is so essential that would take precedence over digging more money out of the ground.
Okay, so given all of that, why are we seeing silver trading below $20 an ounce and even below 19 and close to $18 an ounce?
Well, first of all, that's in U.S. terms only. So if you look at it in other currencies, silver's doing fairly well. But the reason is it's based on an outlier. It's based on the way the futures market works. And the way the futures markets work is how much supply and demand is there of paper contracts. And there's basically an unlimited supply of paper contracts. You could create a piece of paper that says 5,000 ounces on it indefinitely. So that's part of the answer. The other part is, well, if that's true, then why doesn't someone stand up and take delivery off the exchange and then the paper game? And the answer to that is that there's restrictions. The only one that did that in modern times was Warren Buffett. In late 1990s, he bought 129.7 million ounces off the exchange, which was a significant amount. I forget the percentage. And after that was accomplished, and it took them a while for him to get the full bill. In other words, you got 90 million ounces, and several months later, they completed the 40 million ounces. If I said billion, I'm mistaken. It was 90 million ounces and then 40 million ounces. It took about 2 years to fulfill the order. And they changed the rule. The rule now says you can only take 3,000 contracts. So 3 times 5 is 15. So you've got 15 million ounces you can take at any one time. That's by their rules. And when you sign up for their rules, you sign up that you're going to trade a paper contract and they can settle with metal or they can settle with cash. So if someone were to come in and do a Buffett, first of all, the exchange would probably give you a phone call and dissuade you from doing it. But if they didn't do that, you just stood your ground and you'd only be able to get 15 million ounces every month. And then at some point, they might just say, here's your check, because read your contract, Dave. Mr. Dave Russell, you signed this contract. It says we could settle in cash. So the idea that you can break the COMEX is out there. And certainly I think you could get close enough for it to be a real problem. And the reason being is that even though those rules exist that I told you, if there's a big player that demands physical and they really pretty much have to deliver, and they can, of course, they'll go to the LBMA, they'll go to London first and say, hey, help us out. And all these bullion banks work together, so, name a bullion bank, talks to another bullion bank, hey, lease us some more silver or loan it to us or swap it with us or whatever. We got to get it to Apple Computer, and we don't want to have egg on our face. So I think it will happen, but it won't happen in, the COMEX can't deliver silver. Well, they could do that tomorrow and still retain what they have in the registered and eligible categories and just, give a wave, if you catch my drift, to the market and say, hey, you guys, we're just obeying the rules you signed up for. We're settling all contracts in cash. We need silver for the war effort right now. Without silver, we won't be able to win this war. I'm making that part up, of course. We've given an extreme example, but silver is a strategic metal. It is a metal of war. And the exchange can make up any darn thing they want. We've seen that in the past. So
One of the things that we're hearing a lot about at the moment is the US potentially losing its reserve currency status and the BRIC countries potentially creating a commodity-backed currency. Is this something that you can envisage happening?
Yeah, so I haven't looked into it deeply. Of course, I have to study all this stuff, and I'm certainly aware of it. I think certainly it's a possibility. It would definitely gain favor with the financial markets. I mean, you know, anyone that has any sense would go, would you rather have a currency that's backed by reality or one that's a total fiction? And the answer is I'd rather go with reality. The issue I have with it, Dave, is that it's a basket of commodities. And that's well and good, and it kind of makes sense. But how much oil do you put in, and how much wheat do you put in? And those are variables, and the price changes with supply and demand. Whereas if you just make it simple and you put it on a gold standard, it's real easy. And there's one thing. So really, to me, it's overthinking the situation. Oh, basket of commodities. No, just go back to gold. And there's been talk about the gold yuan years and years ago. It's not happened. It could. I'm not sure it will. I'm not stating that it will happen. But the same thing with the BRICS. I mean, if they were just kept it very simple and made it, equivalent to a certain weight of gold, that would be something everybody understands. And gold's got a huge mass above ground. I mean, the amount of mining that happens every year adding to the gold supply is a small percentage of what already exists. So you don't have the ability to inflate the gold supply like you do, like it could happen with the basket of commodities. Let's just say that, oil's in there, and of course oil's going up and up and up, and all of a sudden there's a huge discovery, which is very doubtful in my mind. But the point I'm making is that if you had a huge change in that particular commodity, now your basket of commodities has really got to be adjusted by the market. Whereas gold, it wouldn't adjust that much once it got to the level that the market determined the value of gold relative to goods and services. And that would take place naturally if and only if the political class stayed away from it, the financial pundits, the financial money masters left it alone and let the market determine. If the market, interest rates were determined by the market, we wouldn't be in the mess we're in now. It's only when the nice government men decided that they would have central control of the economy, what they call the economy, really the financial markets, when they decided that they knew better than we did, meaning the aggregate of people buying and selling in a free manner, free and fair manner, that they started to distort things so bad that many of the pundits that I associate with call it financial repression, which is a very accurate term. They're basically holding the value of what the cost of money is. Remember, an interest rate is the return, but it also tells you something about the value. I mean, if it costs nothing to have money, then how valuable is it? Or if you've got a negative interest rate and someone will pay you, which is the most absurd thing you could think of in finance, to hold them money, how valuable is it? It's not very valuable if you're getting a negative interest rate. In fact, if you have any common sense whatsoever at all, you'd realize this is the end game. This is the end game. We are in it now. We just don't know it yet because the grocery stores are still open. And I'm not saying they're closing, but some may. So there we go. I mean, I know I sound like Mr. Doom, Gloom, Boom, but the reality is we will have a decrease in living standard across the planet, and we're going to survive it. We're going to get through it, but we really need someone willing to tell the truth. And until we have a system that does that, we are going to be in a financial repression. And the solution that so far has come from the political and the financial elite is we need more control, not less. And you will get less and less a standard of living. You actually own nothing, and you're going to love it. And if that isn't an oxymoron, I don't know what is. Think about it. If no one owns anything, then who owns it? Who are we renting it from? Oh, yeah, the money masters. Oh, the elites own it all. We don't. Oh, we're so happy.
My thanks to David Morgan for joining us on the M3 Report. And if you want to see the whole interview, then be sure to subscribe to GoldCore TV and to be one of the first to hear when it goes live. Next up, we delve into technical analysis for Chart Watch with Gareth Soloway of InTheMoneyStocks.com. Gareth, what can you tell us about this week when it comes to gold and silver?
Hey, Dave. Hope all is well. So let's take a look at some charts here. I want to look at some of the gold miners in relation to gold. And what we saw here this week is gold tag a major level and get a bounce, but the miners are still struggling. And my case here is in the next week or two, you should see the miners pick up and get a technical bounce. So what we're going to do here is take a look at the chart and go right into that. And what you can see here, this is the chart, the daily chart of gold. And what you had here was on Thursday night in the overnight, gold tagged this low at around $1,680. And if you zoom out, you can see that was a major technical support. And even with the market selling on Friday dramatically, gold still eked out a nice little gain. In addition, in the past videos, I've talked to you guys about the dollar topping, and I'm still in that case. Part of that case is that the fact we're seeing more and more weak economic data, which means the Federal Reserve will be able to raise rates less than they otherwise would have to combat inflation. Now, don't get me wrong. Next week, 75 basis point rate hike. It's happening. But then the Fed doesn't have a meeting for 2 months. And my guess is maybe we got 25 more basis points the rest of the year. And maybe in 2023, you're going to see loosening of interest rates or lowering of rates. And that's going to be because the economy, the US economy, is likely going to slip into recession. So what does that mean? Well, it means, number one, that inflation will come down, and the CPI numbers next month will show that. And again, we had peak numbers in this past report over the last couple of weeks. We've seen commodity prices tank quite a bit, but gold again hitting key support. That tells me gold should see more upside here, especially if the dollar falls. Let's refresh our mind on the Dixie, the DXY. Here's your DXY chart. If we go to your monthly chart, and I talked to you guys, I gave you guys this play-by-play about 2 weeks ago saying that this was going to be the top on the dollar. We did pull back. This, again, is the monthly chart, so you can see you've already had the pullback starting, but you will see more downside in the US dollar. All right, with downside in the dollar, you're going to see upside in most commodities, especially gold. And also you should see it in the miners. So let's take a look at the GDX here and look at this trend line on the GDX that I have. So you have some very, very good support right here. You have this downsloping trend line right here. And look at this, 1, 2, 3, 4 candles, 4 months of straight downside. So number one, that tells us that the GDX is oversold. And if we look at the RSI, it's dramatically oversold. In addition, look at all these little pivots going back to 2017 and 2018. So on a technical basis, after an oversold move into key support, we should see a reflex bounce in the miners. And again, if you think about it logically, if the Fed is done after this next 75 basis points hiking, or even if they do another 25 basis points or even 50, but that's it, the dollar again is topped. And I would dare say that the market is already knowing that. That's why the dollar has started to pull back, is because big money already knows the dollar is going to come down because interest rates are likely getting close to their ending move. All right, so again, when we're looking at the GDX, that looks good. If I flip over to the daily chart, you can see it's hovering right on those key levels right there, right in this range. Look at the sell-off we've had. What a dramatic sell-off. And by the way, you can almost do a measured move, take this high to this low, this high to this low, and it's almost an identical move down and down, maybe a tiny bit lower in a little kind of craziness of funds having to unload because of such steep losses. But ultimately, the miners look very, very interesting to me. Some of those miners, we could take a look at NEM, Newmont Mining. Look at the support that this is into here, guys. It just tagged it on this Friday. Look at the 2 trend lines I've drawn in. Pivot, pivot. This is the pre-COVID highs before we had that 2020 collapse. Major technical support on Newmont Mining. AEM, Anico Mines here, another one. Take a look at this, right? Look at this level. I'm going to put a trend line on to just blow your minds here. But look at this area right here. Draw it right through, right around 40 bucks. Tons of support, pivot consolidation. Here's the low, by the way, during COVID when we had everything collapsing because everyone thought the world was ending. And then here's your reflex. This has now again made a significant round trip. Multiple metrics are signaling oversold for a near-term bounce. Now, how high could the bounce go in the near term? My guess is you're going back to about $46 to $47 on AEM. Now, again, that's about 10, 15%, well, closer to 15%. That's more of a swing trade. I even like these more for the longer term case. All right. Now, again, the one thing you have to watch about with the miners is that you have to watch inflation numbers, because if inflation stays high, remember that their input costs will remain high. So gold is going to have to really go up substantially for them to still make a lot of money. I still think that will happen. But again, if you're looking for a pure play, gold is your pure play. Shorter term, I think the miners are extremely oversold. They should perform as well over the longer term, but you do have to take into account that inflation side of their costs going up for mining gold, equipment, gas, and all the oil and stuff that goes into mining for their vehicles and so forth, and getting it out and processing it. So again, that's the key analysis here on gold, on the gold miners. Very interesting week on gold, hitting major support. The miners again hitting major technical support. And again, the dollar again, if it has topped, if the dollar and big investors are reading that the dollar is going to come down because interest rates are getting close to the end of the hiking session, the hiking period, then again, all of that points to gold being nice or golden, as well as the miners. All right, Dave, have a great one. I will talk to you soon. Take care.
Thanks once again, Gareth, for bringing your knowledge and insights to the M3 report. And as always, there was plenty in there for us all to take into next week. If there's anything you'd like us to cover on the next episode of the M3 report, then let us know in the comments below. We'll be sure to pass them on. Don't forget, if you want to see more of Gareth's work, then you can find him at inthemoneystocks.com. And if Gareth's analysis had made you think that it's time to start investing in precious metals, or you'd just like to find out more, then why not check out our website? We are GoldCore, the precious metals specialists, meeting all of your gold, silver, platinum, and palladium requirements, from gold Britannias to silver eagles, from fully allocated, fully segregated gold coins and bars stored in specialized high-security vaults around the globe. We've got you covered. Simply head over to goldcore.com now and sign up to get started. My colleagues are a friendly bunch and happy to answer any questions that you might have. And still to come, stay tuned for Fire, Hire, Admire. But now for Sign of the Times, our feature that involves news items or anecdotes from you, the viewers, that say so much about the world that we live in today. This week's Sign of the Times is a quiz spotted in Ireland's thejournal.ie. The challenge of the quiz was to see how much the reader knew about currencies. One of the questions was this: what is fiat currency? Currency that is backed with a commodity like gold or silver, currency that is not backed with a commodity like gold or silver, money you save for a car, not a currency, but another word for bartering. Sadly, we haven't heard from the journal what percentage of people got this right. But what we did spot was this, written in the comments by a Mr. Mick Tobin. He writes, the fiat issue is the interesting one, since money is supposed to be scarce in the sense of not unlimited. But by letting go of being tied to a tangible scarcity like gold or silver, the question becomes what this commodity then becomes. Production, GDP, people, trust? I honestly have no idea anymore. Does anyone on here know what money really is, except this stuff to pay the rent and all, while seemingly getting less valuable on pretty much a weekly basis? So anyone? What is money in layman's terms? And why does it work if not tied to something like gold? What a great question. In fact, is it working? Is the current monetary system working for anybody? The participants in the conversation clearly don't think that it's working. The damage caused by inflation is refocusing their minds. It's caused them to start questioning what money really is, what currency really is, and why inflation is happening now. So what is money based on? Well, what follows is an interesting discussion between Mr. Tobin and the other readers about what the value of money is really based on. This is brilliant. It's well overdue that these sorts of discussions are taking place in the mainstream news outlets, and here they are. What's unfolding is a dawning on behalf of a number of regular readers, savers, earners, and your man down the pub that our monetary system is based on a pretense that all will be all right in the end. Mr. Tobin refers to a scarce resource backing our money. In many respects, he's right. Our money is backed by the very scarcest of resources in our modern world, trust and confidence. We're expected to trust that the value of our money remains the same, and we're expected to have confidence that central bankers are competent enough to preserve the value of said money. Of course, our trust and confidence in our money system is waning rapidly, as shown by these very comments. This is why we see an uptick in the demand for gold and silver. because as we lose faith in our monetary system, then we naturally turn to the ultimate scarce resource that we've all got confidence and trust in, and that is precious metals. This is why we bring you the M3 report, to show you that whilst the loss of confidence and trust is systemic and becoming more widespread, there's still so much you can do to protect yourself and to build yourself a portfolio that you do feel will have your back during times like these. And that brings us to the end of this week's The M3 Report. If you've enjoyed the show, had a nap during the show, or want to share the show, please let us know either in the comments below or by tweeting us at @GoldCore or by using the hashtag TM3R. And don't forget to hit the notification bell to get notified for the next episode. That's all from me, Dave Russell, and I'll leave you with David Morgan in Fire, Hire, Admire. This is where we ask our guest who they would most like to fire from their current role, hire to any role of their choice, and who they most admire. Previously, we asked Jim Rickards the same question, and I highly recommend you check out his answers if you haven't already. But for now, sit back and enjoy David Morgan's thoughts on those he rates and those he doesn't. Until next time.
I would fire Klaus Schwab, even though he doesn't have an official title, the founder of the World Economic Forum. Who elected him? No one. Then what is he there? So I'd fire Klaus Schwab immediately. I would hire Lou Rockwell, who's the basically runs the economics or the Austrian school in the South of the United States, as the economic advisor as a minimum, perhaps comptroller of the currency, or perhaps head of the treasury. So I put Lou in. And who I admire, now when I had to really think about, because there's so many out there, and getting to one was really difficult, but after I pondered for a while, it would be Murray Rothbard. I think Murray was so prolific in what he did about the anti-state, in other words, freedom, and what it meant and how it played in the monetary sphere, and why there's a direct correlation between, free money, free price of money, meaning interest rates and everything else that goes with freedom, and why the state's interference in our lives brings more misery than it ever does benefit. So I'd say Murray Rothbard would be who I admire.
You want to know how to be a successful investor? The answer is stay with what you know. Don't listen to me. Don't listen to TV people, internet people. Just stay with what you know. If I told you you can only have 20 investments in your life, you would be very careful. You wouldn't be jumping in and out, listening to hot tips every day, every month. You would stay with what you know, and you would become a successful investor. Everybody watching this knows a lot about something, whether it's fashion or cars or sports or something. When you see something that you know is going to be successful and exciting, don't just say, oh, that's going to be great. Don't tell all you. Then you go and you do your research and you figure out how to and if you should invest and how to invest, and then you invest. You will know it long before I will, or long before other people in the investment community. You will also know when to sell, because you will know when something's going to change again. Nobody likes to hear it. Everybody wants a hot tip. Everybody wants to be rich this month. In those days, we did nothing but focus and concentrate and dig deep and dig deep and dig deep.
Hi there, Greg.